they've done studies, 60% of the time it works every time.
That doesn't make sense.
And that right there is the math behind the stock market. Obviously, I'm kidding. Um, been kind of an interesting week. Had a rough Thursday, Friday, but like I said, welcome to my weekly stock picks. This is for the week of 9/21 to 9/25. Let's go ahead and take a look at the NASDAQ first. The NASDAQ is looking very weak. It's looking very bearish right now. It looks as if this week, unless we, get very lucky and just get this really nice bounce off this and it, kind of heads up, it's looking more likely that's going to, slowly trend down and then hopefully, consolidate a bit and then come up, just in time for election. So that's been historically right after election time, the stock market, gets a nice little boost. So uh, NASDAQ, a big component of the NASDAQ is Apple, which has, purchased a one-way ticket on the struggle bus. If you're looking for a good long-term investment, I'm talking 5 to 10 years or more. Apple right now shares, I think, are a good buy. I'm buying, more Apple shares. I'm trying to load up on my long-term portfolio. So I like a lot of Apple right now as it keeps going lower. Because eventually, Apple's too good of a company to stay down for too long. So they'll be back up soon. So let's go look at the S&P 500. S&P 500 is trading in this kind of channel right here. It did have a rough, it's been, if you look at all this red, very few green. It's had a few rough, 2 rough weeks. Hopefully we can, bounce up this week and, that we're looking kind of at two different scenarios here. The way I have this, I'm looking at the bullish scenario, so I'm hoping this is 4, and then we bounce up for 5. 4 usually consolidates for a bit. So we hope that we bounce off soon, or it consolidates a bit and then goes. Either way, that'd be a good nice scenario. Another one is that this right here is actually the 5th wave, and that if that were to be true, we'd have an A, B, C correction coming up, followed by the 5-wave impulse. So, let's see. Nobody knows. Anybody that tells you that they know for a fact the market's going this way, I wouldn't listen to them because nobody knows. So, all right, let's jump into my stock picks here. Let's talk about the too good, too bad. So 5 hit the price target. Great pick. It hit its price target on Friday intraday, and that should have been done. So 5, great pick, 7.59%. Dix is close to its price target, 6.83%. I still have. Oh, that reminds me. I have calls in both Target and Dix. I want to let you guys know to take it easy on options moving forward. Until we have a clear sign that we're back into a, kind of bullish environment. Let's take it easy. Maybe go. I'm going to be very careful with options. I'm going to raise my minimum stop loss to 25% rather than the 40 to 50% I usually do, just because the market right now is a bit more risky than I feel comfortable with for options. So it'll be very rare I do an option. I'll let you guys know if I do. But if I if I do get into the market and I do buy some stuff, it'll be shares most likely. So I'll let you guys know though. I'll let you guys know what I'm doing. So PayPal kind of took a beating, but it got into that buy zone. It's the reason why it's my 6.13% is it jumped up early. My picks, a lot of my picks ran Monday and Tuesday, and then Wednesday, Thursday, Friday happened, and it just tanked. So it's in my buy zone. I bought some PayPal on Friday. JD, kind of hanging in there, not quite going off yet as we expected, but like I said, all my picks usually hit between 2 and 4 weeks, but I give them up to 6. So if by 6 weeks they haven't hit, we kind of take a look at where they're at and what's going on. So, all right, let's jump into it. Edwards Lifesciences. There's a IDB composite ranking for different stocks, and of all the medical stocks, Edwards is ranked the highest with a score of 93, I believe. That's rated on a lot of different fundamentals and a lot of different variables that you can measure with stocks, and it's rated very high. A lot of mandatory. You were only allowed to do during COVID. You were only allowed to do mandatory surgeries, but now with all these, COVID's, we're opening up a little bit more. So some of these other surgeries will start happening and procedures will start happening more. So Edward, I think, is going to be kind of big there. Let's go and take a look at their chart. They've been bouncing up and down. They keep bouncing off this green line here. It's acting as a very good support. It's a great floor for them. I think that they're ready. Let's hope that they bounce up. Like I said, it depends on the market, but so far it's been kind of consolidating for 4 right here, right in that little range right there, and we're hoping that this maybe dips a little bit more and then it takes off, right? That's kind of always the hope, is we just get a little dip and then it takes off. So um, Edwards looking good. I like that one. Zendesk, they compete with Salesforce in one specific area. Salesforce does a lot of stuff, so they're a very good company. Um, but Zendesk is trying to compete with them in one of the categories. So let's check out their chart. Um, so yeah, like I said, it's kind of trading. Zendesk, I will say, is probably one of the more risky ones because it did have this dip here. Per the rules of Elliott wave theory, this is allowed. I mean, there's a lot of different ways you can get from 2 to 3. You don't like to see this because then there's always the chance that it can, fill this quote unquote gap and go back down here. And if it goes back, now it's hit 3. If it goes back down there after hitting 3, then it's broken. So Zendesk may be a little bit more risky than the other 3, but it's setting up nicely. You got that consolidation, and you hope that you're hoping here that it pops off and goes up for 5. So let's see how it goes. Maybe it dips a little bit out of this box and then goes. So let's watch Zendesk this week. Okay, next was C Limited. Great company. They've been running like crazy lately, but they've been dipping since they had that crazy run. Um, they're looking good. They're looking like they're about to start wave 2. This is one I'm really high on. I think they're going to do good. I know they're technically a tech stock, but like I said, some tech is doing okay, others not so much. So C Limited, I like them. I will, a lot of room to run. So let's hope that they can do something here and maybe consolidate it and take off, like some of the others. So Zillow, real estate's been hot. Redfin, one of my other stock picks, hit its price target. I see no reason why Zillow won't as well. So let's go to Zillow. As you can see, it's trading in a channel. It's been staying in here. Pops out a little bit here, drops out a little there. But overall, it's staying nice and clean. I like it. It's trying to push out of this. Maybe maybe it's time. It's ready to break out and go. The momentum's on its side. It's ready to start. And I think we get to 3 pretty soon here. It looks. Oh, sorry, I forget. You guys can't see this. So from here, we're hoping it gets to 3 pretty quickly there. It's looking good. Like I said, I find that these, I'm very picky with these stocks for you guys, so I like this one. Zillow, I will most likely get into as well. I like Zillow a lot. I use it personally, looking at different real estate and things in my area, just to know what's going on. So, all right. So, and then if you go look at my stock picks, you can look at my buy zones, my cut loss, and price target. I have the charts of each one also, so which we just reviewed. So, all right, earnings play. We got Nike, Carmax, and Costco, 3 very good companies. Nike has been switching. They're cutting out wholesalers, so they're switching more to a B2C versus a B2B. B2C is business to customer, so direct to the retail customer versus they sell to a wholesaler who then sells to a customer. That's a business to business model. So they've cut out 9 wholesalers already, and they're switching more to have a better relationship with the end customer. So that's pretty good. Michael Jordan's documentary Last Dance increased sales of Jordan shoes. They saw a big spike in interest in Jordan shoes. I mean, they've always been popular, but they saw a pretty big spike when that documentary came out. So big on Nike. I think they'll do well. CarMax. They've been rallying pretty. Oh, sorry. Let me show you the. Sorry, I always forget to show the charts. So as you can see the charts, if Nike can take off, they have good earnings. We can see a quick blast up to wave 3. They can finish that off, and then they'll kind of have that correction for wave 4. If they don't, they're going to sink down and they're going to break trend, and it's going to be struggle bus for them as well. So next one is CarMax. They've been getting a lot of price upgrades lately, so that's always a good sign, especially right before earnings. I believe FedEx was also received a bunch of price upgrades right before earnings last week, and you saw how FedEx did 8% overnight in after hours, so that was a good sign. Over here, it's just bouncing off this, this kind of floor that it's created. It's looking good, looking strong. I think Carmax has some good earnings. Everyone's expecting them to, turn in some good stuff there. So hopefully, it goes off and continues to go up, and then we'll bounce back down later. So obviously, if you get the earnings play, you want to sell right here, buy here, and then sell there. So hopefully that happens, and we can make some nice money there. So next up is Costco. This is the one I'm big on. Everybody has bought Costco during the pandemic. I think they've done extremely well. I mean, the volume that they're pushing out is incredible. They're asking a lot of their employees to work extra hours. That's always a good sign. FedEx was the same way, and you saw how they did in earnings. It went crazy here because everybody was buying Costco during the pandemic. I mean, the lines were insane. You saw them on the news, but once it got to about here, early September, we started going to this correction. It looks like we've hit the bottom of the correction. So maybe for the next couple of days, we just, kind of stays kind of even, and then hopefully we take off for wave one. That would be an ideal situation. I'm probably gonna buy some shares, and I'll probably do the Costco earnings. I like them. I need to look into them a little more. I need to look at their fundamentals a little bit more, but I'm pretty sold on Costco. I think they're gonna have a good earnings. Of the three, my stamp goes to Costco. I would play them if you only play one of them. Okay, let's go to honorable mention here. Microsoft. Never thought you'd see Microsoft on honorable mention, but here it is. Okay, so uh, the interesting thing about Microsoft is that it's done its 5 waves, and then just like the rest of tech, it has gone through its little correction here. The difference is that the correction that it's going through um, usually comes right up to the level of 3. If you see that, that's a pretty good sign that this is an ABC pattern. So it's almost done. I mean, we could maybe go down a little bit more, another $5 to $10, and then hopefully we're coming up for wave one. That's the goal. I mean, if you can get in here and then it takes off, fantastic. But if we're in a full out slide and the stock market is quote unquote broken, I mean, we could keep going down and up and down and all sorts of stuff down to like the 180s for Microsoft. I mean, who knows, right? So we'll see. MGM Grand, Viva Las Vegas. So MGM, I posted this earlier last week. It didn't make stock pick because it's showing some weakness. It got some price downgrades, and I think the reason it got price downgrades was because their bet MGM was not competing well with Penn or what's the other one, DraftKings. So I think that's why it popped down here. The hope is that it can come back in and consolidate a bit more and then take off. Short interest is above 10%. So that's a good sign if you can do the short squeeze. But if the Bears win, it looks like we could head down all the way down to the bottom 2 here and get back down to $14 if it gets real bad. So, hopeful the best for MGM, but we'll see. Netflix. All right, so they've got a bit of a falling wedge pattern here. But like I said, if they finished off wave 5 here, they could have the ABC correction, and the hope is that it's just going to consolidate and then takes off. They've been in the news a lot lately, not for the best things. They've been a little bit of controversy with some of the stuff they're putting out, but I think people are, they're still a strong stock. They have earnings coming up, and if a lot of people are still signing up, then they're going to look in good shape and could take off for earnings. If a lot of people drop them because of all the controversy that they have, then that's not going to look good. So that's why a big reason why Netflix is on the honorable mention. And the last one, Nikola. Oh, Trevor. He keeps getting himself in trouble. I personally dropped Nikola because of him. I do not think he's a fit CEO. I think he's going to cause a lot of trouble. I think the stuff he says on Twitter is not what a CEO should be saying. And I think once they replace him, their stock will rocket. So I'm just waiting for that, and then I'll buy back into Nikola. As you can see here, it kind of hits this area, takes off, comes back down, bounces again, takes off. So is this going to be a smaller bounce? As you've seen the big bounce, medium bounce, maybe this is just a little here and then back down. So if you can buy in, at one of these lower prices at like 30, and you can sell it, at mid 40s, that'd be, that'd be a cool, quick little, flip. So, and those are my stock picks for the week. Now, I will warn you guys, these weeks coming up, as we get closer to election, as you know, Congress is fighting right now and trying to get another stimulus done. There's no guarantee, there's no promise. We don't know if it'll get done. All we can do is hope. Stock market's been in a tough territory. I really do caution you guys, be very careful this week. Do not over risk. Some of you guys have been messaging me saying, what do I do? I'm in and it's market's crap. Well, that's exactly why that over risk rule is there. You should not be risking too much of your portfolio because who knows, you never know what can happen in the stock market. So, all right, I wish you guys all the best. Let me know if you have questions. I'm always here to help. Message me, comment on something I put on Twitter. Other than that, you guys have a great week, and I'll see you in the market on Monday morning. Okay.